This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney as we bring you the latest on the conflict in the Middle East with the trading day beginning in Asia. This is where seeing oil open at the moment after surging more than 7% on Friday as Israel launched its first attacks on Iran. US futures are also looking like this, with investors across financial markets squarely focused on the escalating geopolitical tensions. Israel signalling no let-up in its campaign to destroy Iran's nuclear capabilities in a third day of fighting. Israel striking Taiwan on Sunday and Iran firing several waves of drones and missiles. Meanwhile, President Trump is heading to Canada for G7 meetings that will present a fresh test of unity among the world's richest nations.
For more, let's bring in our managing editor for the Middle East and North Africa, Onur Ant, who's in Istanbul. Senior editor Wendy Benjaminson also joining us from Washington. And the host of Bloomberg's The Big Take podcast, David Gura, is also covering the G7 meetings for us from Canada. Onur, let me start with you, because we've been surprised at how fast these attacks on each other have escalated between Iran and Israel. What's the latest right now? Because we're just hearing about energy assets as well as we're continuing to see oil gain ground.
The two countries continue to bombard each other for fourth day since the conflict between the two erupted into open fighting last Friday. We have seen over the last 24 hours fresh waves of missile and drone attacks from Iran targeting various cities in Israel. And on the other hand, the latter continued to hit targets across Iran, including energy assets on Saturday, and on Sunday, various targets in Tehran, killing a senior intelligence official of the IRGC. Over the weekend, we have seen no sign of a reprieve or a let-up in the fighting between the two, as the two continue to launch various missile and drone attacks against each other. So far, the number of dead seems to be around 14 in Israel and about 224 in Iran, and there has been no sign that either of the sides will back down. We've also seen that Israeli administration appealing to the US government to intervene in the war on behalf or on the side of Israel, whereas President Donald Trump has kept it somewhat vague whether or not the US really intends to be a part of this war. And just a few hours ago, the president also said there will at some point peace between the two countries, but it was a very cryptic message, and there is no public sign of a real diplomatic effort that at least seems to be nearing an imminent result along the lines that Donald Trump has suggested.
And as you say, there's no indication that we're going to see any sort of step down from either side anytime soon. Do we know what further objectives there are when it comes to what Israel is trying to achieve?
Well, Israel's main military objective at least seems to be preventing Iran from pursuing further nuclear enrichment. Obviously, the Israeli side says that this enrichment has always been about acquiring a nuclear bomb, which is something that the government in Tehran has vehemently denied. They have said that this is purely for civilian purposes. But regardless of which side is right about the purpose of the nuclear enrichment process, the clear objective of the Israeli military and government is to basically damage all the nuclear facilities and sites in Tehran to the point where the Islamic Republic can no longer begin or resume enriching uranium. On the other hand, for Iran, it's a lot more trickier situation. They have been unable to respond effectively to the Israeli attacks. They have been unable to defend their own airspace, and this leaves them in a very awkward position because the proxies that have backed in the Middle East, such as Hezbollah in Lebanon, have been unable or unwilling to intervene in this war on Iran's behalf. And on the other hand, Iran itself seems to have a very shrinking set of options in terms of how it responds to Israel. So far, it has refrained from resorting, I would say, extremely explosive options, such as trying to block oil shipments through the Strait of Hormuz, which is something that financial markets have been very wary of since the conflict began. But other than that, what it has been able to do has been somewhat limited in terms of the effectiveness of the military response it has developed against Israel's attacks.
Wendy, there's been a lot of ongoing conversation around exactly the US role in this, the knowledge of this, and how sort of cohesive the plans were to go ahead with the initial attack, right? We know that we are hearing that President Trump blocked a plan or the possibility of the assassination of the Supreme Leader. What more do we know in terms of how the White House is playing into this now?
Well, as Owner said, there are lots of cryptic messages. There are lots of sort of half-finished thoughts that the president is putting on social media and in conversations with reporters. So it's very hard to tell. We do know from U.S. officials that the Israelis wanted to assassinate the Ayatollah Khomeini, the head of state of Iran, and that Trump apparently said, no, you can't do that. That's just going to make things too, too fiery, and then the U.S. might have to be involved. But in that veto, if you will, he also said, have the Iranians hit any Americans yet? No, therefore we don't want you to hit the Ayatollah. So I think he's trying to make this a narrowly focused fight on Iran's nuclear capabilities. And that's what he's using as leverage to try to bring Iran back to the negotiating table in Oman, which of course hasn't happened because, why? Why would the Iranians at this point? What's in it for them?
And this was a meeting where President Trump said that he could potentially get that nuclear deal, right? Is it surprising that, as you say, when it comes to this Israel-Iran conflict, we're not seeing anything more official from the White House other than the social media posts and comments to reporters?
Well, that's how the president of the United States communicates with people, through social media posts and with reporters. He doesn't really do the, East Room news conference unless he has to with a foreign leader. But the White House has made it clear that this is not America's fight, and yet they wanted to resolve peacefully. And Trump sort of suggests that at some point, if it gets to a certain point, he'll step in. But remember, his base that elected him believe in America first. And that's his governing philosophy, is America first, retreat from Ukraine, retreat from other places. In fact, he even talked to Vladimir Putin or yesterday, I believe, about having Putin mediate talks between Iran and Israel, which is an odd development, to say the least, given Putin's stance on things.
Right, Wendy Benjaminson there joining us from Washington, D.C. with a reaction from the Trump administration. But let's turn really quickly to David Ingles, who's now joining us from Hong Kong, because, of course, we're seeing the rapid reaction early in the Asian session, especially when it comes to oil prices.
Yeah, we're just coming online, getting the initial pricing coming through as well. Just keep in mind the close on Friday, 13% up, 7% up at the close, 74 and change. The gap higher earlier on a couple of minutes ago took us to above 78, 78.50 thereabouts there on Brent. A couple of other contracts, of course, as you can see, West Texas and all the way down, of course, the energy curve as well. That's a look at oil. So we're up, let's call it 4% early in Asia on Monday. What's the appetite as far as risk appetite is concerned, or havens? Let's flip the boards, please, and have a look at everything from gold, some of the currencies, and, of course, 10-year bond futures, which, by the way, acted not as a haven asset on Friday. As you can see, it's slightly to the upside. So I'll end on this, right? Watch gold spot. 3,500 was your all-time high that we hit back in April, late April as well. It's risk off, but it's not a stampede towards the exits just yet in the early goings of Asia. Back to you guys.
David Ingles there with the early Asian market reaction as financial markets grapple with the implications. Let's get back to what the diplomatic fallout continues to be. David Guro joins us now. David, what a time to be going into a set of G7 meetings, right? We also know that, President Trump doesn't tend to enjoy these sort of multilateral gatherings. How do we expect these leaders, many of which have already made statements on the ongoing conflict, to kind of deal with this situation this week?
Well, you're right to bring up his attitude toward these meetings, and everyone here is thinking about what happened in 2018 when the G7 was held in Canada, and it ended in a fury as Donald Trump tore up the communique and left in a peak, tweeting criticism of the then Prime Minister Justin Trudeau as he left town. So going into these meetings, all these members of the G7 and these other nations were walking on eggshells, it's fair to say. They were being very careful in sort of what they proposed they would talk about here, what these meetings would be about. Now, of course, this conflict in the Middle East has changed the calculus completely. It looms large over these meetings. And you're right, in the run-up to these meetings, which start tomorrow, we've seen a lot of bilateral conversations happening by phone among these world leaders. And if I could kind of synthesize the overarching theme of them, it's urging Israel and Iran to de-escalate. That's the word that we see over and over again. And picking up on what Wendy Benjamin said just a moment ago, we don't tend to hear from the president directly in press conferences or in statements from the Oval Office. We are scheduled to have an opportunity like that on Tuesday. He has scheduled a news conference here in Canada at the conclusion of these talks. So we'll see if in this forum, when there really isn't any concerted effort to get all of these countries on the same page, as there usually is at these summits, there's unlikely to be any kind of joint communique. If they will come together and on this issue of Israel and Iran, deliver a statement, a forceful statement of these nations to those two countries to try again to de-escalate the tensions in that region.
And David, of course, on top of the geopolitical backdrop, we have tariffs to contend with. What are we seeing when it comes to the trade negotiations ongoing between just many countries, not only with the United States, but among each other?
That's definitely the topic of conversation on the sidelines of this summit and will be over the course of these next 2 days. So you see these nations setting up meetings with one another to talk about trade. I think most acutely we saw that between the United Kingdom and Canada. So Keir Starmer, the Prime Minister of the UK, was in Canada for the last couple of days. He met with Mark Carney. They watched a hockey game together. They issued a statement that they plan to work together on a kind of codified formal trade deal going forward. That's very much the tack of a lot of these nations, that if they can't immediately broker a deal with the U.S., they're going to look for new avenues for trade deals. Now, they all do want to broker trade deals with the U.S. And again, before this conflict in the Middle East, I think there was some hope that we could see some of these deals in whatever form inked on the sidelines of the G7. Now I think that expectation has waned somewhat. And just one other economic note I'm going to point out, picking up on what David Inglis was talking about just a few moments ago. Those oil prices and the threat of higher oil prices are having a real effect on one other facet of these talks. Several European nations wanted to see that price cap on Russian oil lowered, and now you're beginning to see some hesitation among members of the G7 for doing that at this moment in time because of the fact that oil prices, energy prices could be going up as a result of this conflict. So that's yet another thing that's kind of colored or influenced by that conflict in the Middle East here on the ground in Canada.
David Guru, our correspondent for Bloomberg TV, the host of the Big Take podcast as well, joining us from Banff, Alberta, Canada, where we will be seeing those G7 leaders gathering, including, of course, President Trump, who's speaking to reporters at the White House at the moment, saying it's time for a deal. We'll see what happens. So we'll continue to get you the latest across this ongoing Israel-Iran conflict, the implications, of course, for global leaders, for financial markets, for global economies as well. Our former U.S. Undersecretary of State joining us later. We'll be speaking with the Schork Group, giving us an outlook when it comes to the volatile outlook for energy prices. We'll also be examining the risks for the broader Middle East. Much more ahead. This is Bloomberg.
And we continue to follow the latest developments on the Israel and Iran conflict. Right now, we just heard from President Trump saying that the U.S. continues to support Israel, that it's time now for a deal, and that he'll see what happens in this conflict. He was responding to questions from reporters about the Middle East conflict. And of course, we know that the U.S. has denied participating in the conflict itself. But President Trump has said in the past that the U.S. could get involved. We have heard that President Trump actually discouraged Israel from trying to kill Iran's supreme leader. Joining us now from Washington is David Hale. He's a former U.S. Undersecretary of State for Political Affairs, a former U.S. Ambassador to Lebanon and Jordan, and a former U.S. Special Envoy for Middle East Peace. And David, great to have you with us, and what a time to be with you dissecting these latest comments, because when President Trump says that the U.S. continues to support Israel, could you give us an understanding of what level of support that implies?
Well, President Trump's comment is really no different than those of his predecessors. At a moment of crisis for Israel, American presidents will always reaffirm that we're there to support them and to help defend them, as you've seen with these air assaults by Iran this year and then last year. The United States was a key partner in helping Israel cope with that and minimize the damage. That's a distinction, though, from actually joining in the campaign offensively toward Iran. And I would be very surprised if President Trump were to change his mind and enter into that campaign.
This week, we're supposed to be, if we had seen what President Trump said actually come through, a nuclear deal between Washington and Tehran. Where is that going now that this conflict with Israel is escalating?
Well, personally, I find it hard to imagine that the Iranians would be rushing back into peace negotiations. They are, however, at an existential moment of truth about the very future of this regime, which has not been the case for the last 50 years. Now, thanks to the Israeli actions, the regime is on the ropes. And unless they can respond in kind or find some other escape hatch from this that is convincing to their people that the Iranian regime remains strong and is able to deter and defend against attacks, they've got an internal problem, and we may be facing soon the possible collapse of the regime. And I think, frankly, were they to rush into talks under pressure like this to capitulate and be flexible in the ways they weren't before, would be an admission to their own people about their own vulnerabilities and weaknesses. So I doubt very much that will put off this moment of truth. If they can't respond in kind to the Israelis, and so far they've been unable to do that, to penetrate significantly Israeli air defenses, they have a real problem at home.
Does that go to the argument, Ambassador, that while short-term goals in terms of delaying or destroying some of those enrichment capabilities may have been achieved, that this potentially, in that sort of existential sense, just pushes Iran towards more conviction that it does need those capabilities?
Well, that's one theory. We don't know that they may rush across the nuclear threshold. They're, 2 minutes from midnight anyway in terms of nuclear capability. And I think that, frankly, we have sufficient intelligence to know that they are moving in that direction. And that may be one of the triggers that would compel President Trump to consider actually aggressively joining the campaign so that our capabilities are brought to bear and not just the Israelis, to prevent that from happening.
One of the arguments, of course, in terms of the timing is the perceived weakness of some of those Iranian proxies. And as a former ambassador, when it comes to Lebanon, what do you see as the state of those proxies at the moment in terms of the ability and willingness to respond?
Yes, I was just in Beirut and Israel a few days ago, in fact. And, of course, we had no inkling about what was going to happen. Hezbollah is definitely out of options. They really are unable at this point to exercise any meaningful influence within Lebanon, let alone pressure on Israel. The problem was in the Lebanese internal scene that whenever the United States and Iran appear to be talking, it freezes our allies and Iran's allies. No one wants to compromise. No one wants to take risks without knowing where power is going to end up in the Middle East. That just changed. And so I don't think Hezbollah can play a waiting game in terms of disarming their militia, which, of course, they themselves volunteered to do as part of the ceasefire agreement at the end of last year. So I suspect, and we should be encouraging our friends in Lebanon to really move forward quickly with finalizing the ceasefire so that Lebanese can move on to a more stable and peaceful environment.
You mentioned, of course, the domestic issues that Iran could face from here. How much is it for the supreme leader, not just about keeping the nuclear progress for his country, but also just achieving his own survival at this point?
I really do think that's the key question. And I think analysis, at least in the United States, hasn't really caught up with that reality. We're still sort of analyzing, what does the escalation mean for the region? And obviously, that's the key question. But if you look at the options he has, he can either respond in kind with attacks on Israel. That isn't working. He can try to attack American bases in the Middle East. That would draw the United States into the war, which is hardly in his interest. He can go after Saudi or Emirati oil installations, but I think that also would reinforce to his public that he can't deal with a real threat, which is not them, but rather Israel. Or he can rush back into negotiations, which also looks like weakness. So I think he's facing a real problem. And the regime was already sort of in the twilight period no one quite knew what was going to happen after this aged man dies. Now the real pillars of the regime were the IRGC and the security establishment, and they are decimated. There's no longer any command and control, including, most importantly, the 3 million basijis, the thugs, who are paid by the IRGC to really enforce the will of the regime against the populace. And if they're not paid and if they're not directed by the regime, they will melt away like an ice cube.
Talking about domestic issues, of course, we know that President Trump faces his own. We have seen the protests around the immigration in that country, but now President Trump also wanting to impose more travel bans on other countries, including on partners such as African nations, not to mention Pacific Island nations, which we knew it was really a matter of influence between Washington and Beijing as well. When it comes to the Middle East, do you see any other spheres of influence growing other than the key players that have been in the game so far? The influence of China, for example, when it comes to Saudi Arabia, Iran as well.
Well, when there's a lot of hype when Saudis negotiated a deal between the Iranians and the Saudis to reestablish diplomatic relations. But after that happened, we really haven't seen the Chinese play a significant diplomatic role, including during this critical period of conflict since October 7, 2023. Instead, they've been absent. Their interests are really commercial, and so they may do things behind the scenes, but they're more likely to lay low. The interesting question is the comments about Vladimir Putin and the Russians, who have traditionally tried to boost up the Iranians, but might try to curry favor with the United States by trying to play some kind of broker role. They do have good relations with the Israelis, in part because of the large Russian Orthodox population there. But Putin's not a peacemaker, so it's hard to picture him really seriously exercising his influence on behalf of stability in the Middle East. To the contrary, they've been a minor player in helping to destabilize places like Syria.
We're hearing now from President Trump speaking to reporters saying that it's time for a deal. We'll see that happens. He's tweeted that a deal can easily get done. He's, of course, promised no new wars in the Middle East. I do wonder, what are the options that are available to the president, to the White House now in terms of US involvement and how it can influence what happens next?
Well, we know President Trump is not a warmonger. He does not seek out occasions in which to exercise American military power if it's going to jeopardize American lives needlessly. He's also, a deal maker, although during the course of these negotiations, he and his entourage have changed the goalposts frequently, and that's been confusing, I think, to the American public and perhaps to the Iranians themselves. But to my mind, if you're asking my advice, I would say the last thing we should do is rush into negotiations and give a sort of jolt of, oxygen to the regime. Instead, we should keep the pressure on, and our role in that would be not to join in militarily, but to really bring down the ability of the Iranians to export oil. The sanctions have not been fully enforced. They've gone down from 1.7 million barrels a day to 1.1. We had it down to 300,000 when I was undersecretary. They should do that to the maximum extent possible and build an alliance based on clear Iranian behavior that is so hostile and aggressive in the region, including at this G7 summit, so that we're closing all avenues of relief to the Iranian regime. So the Israelis may be moving militarily. Our task should be political and diplomatic pressure, not opening opportunities. Later on, the Iranians are really feeling the squeeze. Then you might offer an incentive.
The former US Undersecretary of State for Political Affairs and the former US Special Envoy for Middle East Peace, David Hale, they're joining us. Really appreciate your time. Let's take a look at some of the major political stories, the other stories that we're following this hour. And the Washington Post is reporting that the US is considering restricting entry to citizens of an additional 36 countries. An internal memo covers 25 African nations, including key US partners like Egypt and Djibouti, plus countries in the Caribbean, Central Asia and several Pacific Island nations. The move would mark a significant expansion of the travel ban announced by the Trump administration early this month. California is urging a federal appeals court to maintain a lower court's order limiting the Trump administration's use of National Guard troops in Los Angeles. Lawyers for California argued that allowing the administration to continue directing troops in the city would escalate tensions and increase the risk of violence. The legal fight follows days of unrest amid protests against President Trump's immigration raids. Multiple cities in the US saw protests opposing Trump's administration as he held a military parade on his 79th birthday. Nationwide demonstrations demonstrated the banner of No Kings to denounce what they say are Trump's authoritarian tendencies. The protests were largely peaceful, but some saw sporadic violence, including a shooting in Salt Lake City. Manhunt is underway for Vance L. Bolter, who's a 57-year-old suspected killing of Minnesota Democratic state lawmaker Melissa Holtman and her husband Mark. The shootings took place on Saturday. 2 others were also wounded. The FBI is offering $50,000 for information leading to Bolter's arrest. Authorities searched the vehicle linked to him and are investigating possible motives. More ahead here on the Asia Trade, this is Bloomberg.
Our trade deals. All we have to do is send a letter. This is what you're going to have to pay. But I think we'll have a few new trade deals. Yeah.
Will the U.S. continue to support the defense of Israel? Will the U.S. continue to support Israel in its defense?
We do. Yeah. Thank you very much, everybody.
That was President Trump speaking at the White House just earlier, talking about not only the trade negotiations and the tariffs, but also about the geopolitical tensions and the conflict in Israel and Iran, saying that he thinks there will be a deal soon. He'll see what happens. He is continuing to support Israel. The Trump administration continues to support Israel. Let's get more on the markets because we have seen that sharp reaction early in the Asian session with oil prices higher. David Inglis joins us from Hong Kong. David.
Yeah, Shery, and I think when you look at what's happening cross-asset right now, it's only in oil to a lesser extent in gold. And as you can see, equity markets are cautious, but it's not a rush towards the exits. In fact, we've now reversed most of the losses on S&P, and Nikko futures, as you can see, are now positive. All that being said, it's still fairly cautious when you look at the oil price, and we don't know, of course, how high the oil price will go. What we're seeing in the early goings, first 30 minutes of trade, that's going to come up on your screens. You have Brent, you have West Texas, and you have other, of course, oil products here coming up as well. There we go. So we're up about 3%. We were up as much. The chart's going to show you this next, as much as 4 or 5% at one point. In fact, we were back above that 78 handle in the opening minutes, and then, of course, we've since then retraced slightly to the downside. That's the high we hit, of course, on Friday. That's where we are, relatively speaking. But again, 6 weeks ago, we were sub 60, and we're now closer to 80 bucks, I think, is the bigger story. Right. I'll leave you with this, right? In terms of geopolitical tensions, the price between call and puts and the hedging towards higher oil prices, yellow is where we are. Red is when Russia invaded Ukraine. I'll leave it there for now. Back to you guys. Heidi.
Bloomberg's Asia Chief Markets Editor and co-anchor of the Channel Show, David Inglis, there as we continue to watch very closely that oil market reaction in particular, where that line in the sand is. But to get more answers on that, particularly when it comes to the outlook for these energy markets, we're joined by the Schork Group's president and founder, Stephen Schork. So we're looking at sort of technicals and looking at maybe sort of $80 as being perhaps at least a near-term area for momentum at least, right? How do you see the dynamics of this potentially playing out, given that we know that there were, fundamental concerns about supply as well as weakness in global demand too?
Yeah, absolutely. Let's address this demand side right now. So there is strong demand for the front end of the curve. So crude oil prices through the end of this summer into the end of the year. But when we look at the curve at the beginning of 26, we go into a contango, which is a telltale of a market that is fundamentally weak, i.e. that demand is going to outpace supply. So that's the parameters we were working on. But right now we have an event that's taking place in the Middle East that is, for the oil markets, will trump anything that we've seen thus far since 2000. That is to say, this is more impactful than potentially the United States invasion of Iraq in the early 2000s. We would have to go back to the Iraq invasion of Kuwait in 1990 and the Arab oil embargo in 1974 to get a scenario of taking supply out of the market. So we were already looking at a market fundamentally that was strong this summer, i.e. demand expected to outpace supply. But at the start of 26, the market was reversing. Now, of course, we have this new dynamic in the market that could potentially change the whole supply scenario and clearly lead to higher prices if it gets any worse, and more importantly, if we see a disruption in the flow of Iranian oil and perhaps Arabic from the Arab nations coming out of the Persian Gulf.
As you say, this is not just a regional story. This is a potential for a global shock. But out of that global shock, how outsized is the upward pressure risk for Asian economies in particular?
Yeah, absolutely. When we look at the price of Brent crude oil in the futures market, which is a proxy for the global price market, for the global price, we had at this point coming into this quarter a 5% probability that NYMEX WTI, which is the U.S. market, could trade above $111. And that was based on the fundamentals and the volatility of our algorithms recognized coming into the quarter. For Brent crude oil, that would mean 5% probability of about $114, $115 a barrel. That is in the here and the now. But if we factor in the tail risk that we've now priced in with the potential loss of Iranian oil, and I want to emphasize the potential loss is a low probability, but it is a potential. So then we're actually looking at, albeit a small probability, about a 1 in 10,000 probability of seeing oil at over $160 a barrel by the end of this summer. That would be an extreme tail risk event.
How does that translate to consumers and prices at the pump? Here in Japan, we're already seeing inflation accelerating. We do have central bank decisions, not only in the Bank of Japan, but of course the FOMC as well. What does that mean when it comes to global consumers trying to fill up their tanks?
It is an extreme problem because one of the things that has kept U.S. inflation lower than expected with regard to the White House's tariffs and the boost in inflation that was supposed to cause, we have yet to see it. And we have yet to see it because oil prices have been depressed. That is to say, in the mid-low 60s, high $50 range, which is a very cheap price, which has kept energy costs here in the United States extremely low, and hence the pullback in inflation. But if we begin to price oil prices above $80 a barrel, $90 a barrel, so U.S. consumers as well as Asian consumers, it does mean an extreme risk of higher inflation as we go through the peak summer demand season for gasoline.
When it comes to Asian consumers, how has the calculation from Israel's attacks factor that in? Because they attack these refineries, but not necessarily when it comes to crude fields.
Yes, absolutely. The Israeli approach is very strategic. There is a low probability, i.e. 0%, that they're going to go after Iran's crude oil production. And there's two reasons for this. If they do go after the production and they take that Iranian oil out of the global market, most of it which goes to China and India and other Asia markets, then you create that worst case scenario. Certainly oil prices above $111 a barrel, and potentially to my worst case probability, i.e. a 1 in 10,000 probability, we top $160 a barrel. If you see that, you will see a severe global recession akin to what we saw in 2008. So the chances of that are nil. So that's a good thing for Asian markets. Also, the second approach for Israel as opposed for oil is best case scenario for oil is we see a regime change in Tehran. And that is an extreme possibility. When we hear the stories of what Mossad did, planting these drones deep inside Iran, clearly they were working with Iranians sympathetic to overthrowing the government. So it's a real possibility. Therefore, if we do get a change in the regime change in Tehran, then we're in a scenario where it's a friendly government and the Israelis do not want to take away that new government's ability to make money. And that is, they want to keep oil on that market. Now, of course, the caveat there is Iran might decide just to take their oil off of the market and drive prices higher. So that is the event. But as you pointed out, Israel is going after the refineries for a very strategic reason. Gasoline in a country like Iran, which produces a tremendous amount of crude oil, but you can't put crude oil into your car or heat your home with. They're lacking of refinery capacity. So they have an extreme difficulty in taking that crude oil and making it to what their consumers need. By now taking out that refinery, you are hurting domestic consumption. You are hurting the Iranian citizen. So already with a population, a significant part of that population that already has significant dissent towards this regime, that will only fuel that dissent even more. So it's a strategic reason why Israel will not go after Iranian crude oil, but they will go, and they are going after their refineries.
Stephen, what sort of reaction should we expect, or what sort of strategic, goings on will be happening when it comes to OPEC Plus members at the moment?
Yeah, absolutely. Now, there will be an agreement between the African producers, the Arab producers, and the Iranian producers. When I consulted with OPEC a number of years ago, it was pointed out to me that in the early 1980s, or through basically the entire 1980s, Iraq and Iran were in a severe war where they were slaughtering one another. But each time they met in Vienna, Iraq and Iran sat down and they hammered out oil deals. So I certainly would expect more of that. Now, keep in mind that what is going on in Iran and that potential loss does play into the hands of the Arab producers and the North African or West African producers. So there will be some sort of compromise that should we lose any oil, we'll have to see the other OPEC members step up, promising to get more of that oil out on the market. And they have been doing that even before this event. They've been slowly reducing the quotas that they instituted a number of years ago. So OPEC is already doing what it can. It will be sympathetic to its brother inside of OPEC. So they will be more accommodative of trying to get oil on the market. It behooves OPEC. There's an old saying in trading, you can give your client a haircut every week. You can only scalp them once. So if you drive oil prices, if OPEC fails to get oil onto the market to stabilize the market, yes, prices will spike, but it'll be a one-off. You've scalped your consumer and you've caused an economic recession, which will drive oil prices lower. If OPEC could stabilize prices, currently, where prices are in that low mid $70 range, that would be or should be OPEC's goal at this point.
Stephen, we do have some breaking news actually on the corporate front within that energy space, and I wanted to get your view on this. We're hearing that Abu Dhabi National Oil Co has agreed to the terms for an $19 billion or 30 billion Aussie dollar takeover of Santos. This is, of course, the massive energy giant here in Australia. We're expecting that deal to be announced later on this morning. This is according to the Australian Financial Review. We know that they had been circling. We also know that Adnoc had been circling other assets, including those from BP as well. Given the role of the UAE and some of these other Middle Eastern powers in terms of the potential to de-escalate and bring stability back into the region, how do you figure geopolitical uncertainties when it comes to making a deal like this at a time like this?
Well, I think perhaps it could accelerate it. We're already looking at an industry because of a number of government policies, especially in Europe and North America here, where we've tried to wean ourselves off of oil. And it has led to, over the past 4 or 5 years, a lack of investment coming into the oil and natural gas sector. So a move like this by Abu Dhabi, a tremendous amount of investment coming into the market. And what we're seeing with the potential loss of this supply and a more accommodative government here in the United States that favors oil and gas, this would be the time, and certainly I think would increase the opportunities to see this and even more consolidation in this industry, where companies that have been investing in oil and gas will be in a position now to consolidate the industry and continue those investment dollars coming in.
Schork Group President, Editor, and Founder Stephen Schork there joining us from Pennsylvania. Thank you so much for that. And coming up next, the Center for Strategic and International Studies joins us to discuss how the Israel-Iran conflict could reshape the wider Middle East. This is Bloomberg.
We are now getting confirmation when it comes to the Adnoc agreement to buy Australia's Santos for $8.89 Aussie per share in a cash deal. Santos to provide the group access to the information needed for due diligence and intends to recommend to shareholders to vote in favour of the deal, agreeing to allow that due diligence access to commence. All of this, of course, is subject to the completion of due diligence by the group, but we have heard confirmation on that, which would be a $19 billion takeover of Santos, the Australian energy giant, by Abu Dhabi National Oil Corporation. We know that Adnoc has been sort of circling some of these assets for a while, not just from Santos, but also the likes of BP as well, with talks being held about taking a stake, the country's second largest gas producer, now subject to an acquisition.
Heidi, we continue to watch the energy sector, of course, with oil paring back a little bit some of those earlier gains in the session. We're talking about WTI now gaining about 2% at that $74 a barrel level. But all of this to do, of course, with the escalating tensions in the Middle East. Let's bring in Emily Harding. She's Vice President at the Defense and Security Department and Director for the Intelligence, National Security and Technology Program at CSIS. She previously served as well as Iran Director at the U.S. National Security Council. Emily, always good to talk with you. So give us your view right now of what's happening in the Middle East and what precipitated this attack from Israel and how fast the retaliation was also from Iran.
Of course, right. So from Israel's perspective, Iran was very close to achieving a nuclear weapon or a nuclear breakout capability. Recent reports have said they thought they were in a month or two of being able to get enough highly enriched uranium for several weapons. And we know that they were progressing pretty quickly with their missile program. And those are really the two pillars that are required for a nuclear strike on Israel. And from Israel's perspective, this is an existential threat. One nuclear-tipped missile could destroy pretty much the entire country. Israel has said since October 7th that they really saw Iran's hand behind all of their enemies in the region, from Hamas to Hezbollah to the Houthis. And they've been telegraphing for a while that they were going to try and pursue this kind of course of action against Iran. And what we've seen them do is really a phased attack where they cleared away a lot of the air defense. They went after some of the key leaders of Iran, especially the IRGC, the Quds Force, and then other elements of their military. They managed to clear a lot of the nuclear facilities, at least in an initial way. And now they seem to have free air over Iran to engage pretty much wherever they see fit.
At what point could we expect a pause or some sort of truce here? How does this end?
I mean, it's a great question. I'm not sure anybody knows yet, even Iran. Israel has said they're expecting at least a 14-day campaign. We're not anywhere close to that yet. They have clearly a long target list in mind, and they continue to pursue those. There's been some back and forth today where there were initial reports that Iran had reached out to Oman, who frequently serves as a mediator between Iran and the West, and had suggested a return to talks. And then very quickly, there was another report out of Iran saying, no, we didn't say that, and there's no way we're going to negotiate while we are under attack. It'll be interesting to see if their leadership continues to be targeted, if they change their mind and they do ask for a ceasefire and some negotiations over the nuclear program. I'll be equally interested to see if Israel decides to honor that request for a ceasefire, or if at this point they are so committed to knocking out Iran's nuclear program that they pursue their 14-day plan.
That commitment, it does make me wonder, the sort of shorter term or medium term objectives might be attained, right? Our previous guest said, clearly Iran was sort of 2 minutes to midnight when it comes to that nuclear enrichment program. But when you talk about the existential threat, does this in the longer term worsen that threat? Because does it sort of incentivize Iran's leaders to realize perhaps that, more than ever, that they do need that nuclear weapon capability?
This is the key question. What Israel is pursuing right now is a strategy that they believe will knock back Iran's nuclear program by 2 years, by 5 years, perhaps longer. And their hope, I think, is that in those 2 or 5 years, something else happens that fundamentally changes things inside Iran or in the region where they can have a more permanent solution. We saw Benjamin Netanyahu today coming out and talking about how he was hopeful this could lead to regime change in Iran. I personally am very skeptical that that's actually going to come about. So you have either in one scenario where Israel buys itself 2 years or 5 years to really fundamentally change things. You have another scenario where the U.S. decides to get involved or where Iran pulls the U.S. into the conflict, and then we can bring some really heavy weaponry to bear that could actually end most of Iran's nuclear program on a more permanent basis. If Iran is left with somewhat of a nuclear capability, they could decide to break out as quickly as possible as soon as this round of fighting stops. That's going to be more challenging to do now than it was a few weeks ago, though.
Is the impatience or perhaps even resistance to a US-Iran deal by Israel due to a gap in what the US is willing to accept in terms of nuclear capability from Iran and what Israel is willing to accept?
I think it comes down to a fundamental mistrust of the Iranian regime. Israel has been through so many rounds of these before where they thought they had a deal and then they didn't have a deal, or Iran was sneaking around behind the deal, that they are just hugely skeptical that any kind of negotiation over Iran's nuclear program, except under extreme duress, is really going to be successful. The Trump administration, on the other hand, has really pictured itself as a deal maker, as a peacemaker, and they seemed confident they could get Iran back to the negotiating table and signing a deal that looked a lot like the JCPOA, maybe perhaps somewhat enhanced. But I think the Israelis were just very skeptical that that was actually going to work. And then the Trump administration found itself in a place where they were saying, well, if Iran's not going to negotiate in good faith, then we are not going to hold the Israelis back anymore.
Emily, when it comes to mediating this conflict, who are the key players? It was interesting to me that President Trump, instead of speaking to allies in the region, actually spoke to President Putin of Russia, so much so that French President Macron was sort of asked by reporters whether he's playing a mediating role there.
So the classic mediators, as I mentioned, are the Omanis. They have provided a location for nuclear talks several times. There's also the possibility some other Gulf allies could be involved, like the Qataris, even the Emiratis. Dubai is one of those places where there's a lot of Iranian people who do business in Dubai. The Russians, I think, are trying to insert themselves here for two reasons. Number one, they have developed some closer ties with Iran. Iran has been sending Russia a lot of weaponry, drones in particular, for the fight in Ukraine. And also, if Russia thinks that it can ingratiate itself with the United States and with the West by trying to play a role, then it's going to try to do that. How effective it'll be, I'm not sure I have much faith that'll actually work out. The Chinese have also suggested that they could be a negotiator here, a mediator, but they don't really have the regional experience, and they haven't shown that they're willing to put enough skin in the game, so to say, that they could actually have a real impact. Frankly, I think it's going to come back to the Omanis and perhaps the Swiss, who have often played this role as well. We'll see if other players try to get involved too.
Emily Harding, Vice President at the Defence and Security Department at CSIS. Really appreciate your time. And coming up in the next hour, we continue our coverage of these ongoing developments in Iran and Israel, as well as the role of the US. We look ahead also to the Bank of Japan meeting beginning today, with a former BOJ Assistant Governor joining us. This is Bloomberg.
Take a look at how we're setting up for the early Asia session. Oil prices continuing to gain ground on geopolitical tensions in the Middle East. We are seeing a little bit of a pareback when it comes to WTI pricing, $74 a barrel right now. Of course, it surged the most in 3 years on Friday already. When it opened this morning, was about 4% higher. WTI actually rallied as much as 14% on Friday. Despite the fact that Israel only attacked Iran's domestic energy system, right now there are lots of concerns that this could become a wider conflict. In fact, JP Morgan saying that the closure of the Strait of Hormuz could actually propel international prices to as high as $130. And gold, of course, safe havens gaining ground at the moment. Take a look at how U.S. futures are trading, because we saw, of course, U.S. stocks falling in the previous session on these geopolitical tensions. Energy producers, defense shares, though, gained ground. You can see right now pretty muted as we head towards the Asia Open. This is Bloomberg. This is the Asia trade. Take a look at how we're setting up early in the session. Heidi, of course, we are watching that safe haven demand given the geopolitical tensions in the Middle East. We continue to see oil prices gaining ground with WTI above $74 a barrel, but paring back some of those earlier gains in today's session. Of course, this also coming after a 7% gain on Friday. Despite Israel's attacks on Iran being on domestic energy systems, the fear is that this will really devolve into a wider regional conflict. You can see gold also continuing to gain ground. That haven demand also continuing to rise, not only when it comes to gold on geopolitical tensions, but also on investors trying to hedge inflation risks. Of course, we're not seeing a lot of movement in the U.S. futures side of things, but take a look at how we're setting up for the Asian session, because what's interesting to me is that the Japanese yen is also falling against the U.S. dollar. Of course, you would expect some risk-off really haven demand to propel the Japanese yen higher. But remember, it's a busy week of central bank decisions as well. We do have the BOJ decision on Tuesday, not really expected to change when it comes to the key rate. We do have the FOMC and the BOE also holding meetings this week. Sydney futures at the moment downside of about 0.25%, while Nikkei futures are gaining ground slightly. And of course, the offshore yuan holding steady as we continue to watch that eco data coming out of China this week as well, Heidi.
Yeah, I was going to say, usually that would be front and center, the domestic activity numbers out of China. But of course, we've got a lot to contend with. And let's get some more on what we're watching at the moment. I want to bring our managing editor for the Middle East and North Africa, Ono Ant, and our senior editor, Wendy Benjamin, for the latest. And Ono, when it comes to the continued trading of bombardments between Israel and Iran, do we know where sort of the next line in the sand is, right? We know that Israel says that it's achieved some of its objectives, certainly when it comes to the sort of perception that Iran was perilously close when it comes to its nuclear enrichment program. What other objectives are there for the rest of this campaign?
Well, Israel's military objective from the beginning has been clear that it wants to prevent Iran from developing a nuclear bomb, which Iran says it was never an objective for the Islamic Republic, as its nuclear program is of a purely civilian nature. Now, having said that, and having seen various comments out of Jerusalem and Tel Aviv that regime change in Iran has never been a target for Israel, just today, well, actually earlier on Sunday, we have seen the defense minister in Israel say that the regime in Tehran, or the administration, the government in Iran, is now a target for Israel as well. This came amidst reports, some of which have been verified by Bloomberg as well, that U.S. President Donald Trump had to, for lack of a better word, veto Israeli plans to possibly assassinate Iran's supreme leader, Ayatollah Ali Khamenei, since the conflict turned into an open fighting on Friday. Now, all of these reports suggest that while the main objective of the Israeli airstrikes and military operation remains preventing or degrading Iran's nuclear capabilities, it also is a somewhat dynamic and fluid situation where some Israeli officials are clearly or maybe suggesting that a possible regime change in Iran may also be in the cards.
Wendy, how else is Washington involved in this conflict? Because we heard from President Trump that they want to support Israel, but at the same time, the U.S. has denied any participation.
That's right. The participation from the U.S. right now involves fighter jets and other equipment that Israel has bought from the United States and uses from the United States. The United States has also moved military assets into the region to make sure that if any Americans are attacked, that the U.S. would be able to respond. But President Trump spoke to reporters just as he was leaving for Calgary for the G7 summit. And he said he thought there was a good chance there would be a deal. And at the same time, he said, sometimes you just have to fight it out, which suggests that he may just let this play out and see what happens as long as Iran, I think the red line for the U.S. is if Iran attacks any American assets, any American civilians or military personnel, anything American, then he has threatened to go to war with Iran, which obviously is not a good outcome. But I think he's trying to maybe let this play out for a while in the hopes that it will bring Iran back to the negotiating table for the nuclear deal he's been pursuing with them in Oman.
Onur, so in order to bring Iran back to the negotiating table, of course, it's very important that also the supreme leader feels the pressure domestically as well, right? What's the situation on the ground in Iran right now?
Well, before I begin to answer that question, to be clear, there has been no public poll or survey. So much of what we have seen is very much based on basically, observations. But so far, as is the case elsewhere in the region, including Israel, we have seen when there is a war, people tend to rally around the flag. Now, having said that, on the other hand, Iran has a complicated relationship with its people. Obviously, it has been decades since the Islamic Revolution turned the regime from one thing to another to whatever it is now. And there are parts of the society that doesn't really feel as part of the administration and what it stands for. And it has expressed itself in various types of popular rallies and protests throughout the years, including various protests periods following recent elections over the last 10, 15 years. Add to that the fact that after years and decades of sanctions, Iranian population has been basically feeling the pain of the economic decline that Iran has been in for decades now. Inflation is likely going to be at above 40% at the end of the year. And it seems that on the Israeli side, the thinking is that if the military campaign manages to bring the Iranian government to a paralysis, to a standstill, there is a chance that this might affect a possible protest movement within Iran. And that was obvious from Israeli Prime Minister Benjamin Netanyahu's speeches through the latest round of fighting began. He did appeal to the Iranian people to basically rise up against their own government. But whether or not that really is finding an audience, a significant audience in Iran, is very hard to tell. And to be honest, frankly, sounds quite unlikely. During the times of war, people do tend to rally around the flags. But yeah, so far, the feeling in Iran is basically that they are in a war and people tend to stick with their governments.
Wendy, we're also going to the week that holds the G7 meetings between leaders as well. But before that, President Trump had this 50-minute phone call with Vladimir Putin.
Yes, he did. Ostensibly to talk about Russia and Ukraine, although Trump revealed not only did Vladimir Putin wish him a happy birthday, his birthday was yesterday, we had the big military parade to celebrate it, but that Putin also raised the idea of being the mediator in any talks between Iran and Israel to come to peace. This is landing like a lead ball in among the G7 leaders who, have isolated Putin over his adventures and in bordering nations that border Russia. And Macron, the French president today, just said that's not going to happen. I mean, but Putin is, the only ally that Trump has spoken to about the Iran-Israel conflict besides Netanyahu has been Vladimir Putin. So it's again the sort of new era in U.S. policy where we're hearing from voices we don't normally hear from.
Wendy Benjaminson and also Onur Ant, really good to have you with us, of course, with the latest on the geopolitical tensions and the reaction also from the Trump administration. Take a look at what the reaction has been in the markets because, of course, we've been following oil contracts and we're seeing those gain more than 2% at the moment. WTI, though, paring back some of those earlier gains in today's session that were more than 4% at one point. And remember, even on Friday, it rallied as much as 14%. And it's already raised year-to-date losses, but of course concerns about oversupply still crowding the markets. Let's bring in Bloomberg oil reporter Nicholas Law for more on where oil prices are headed, because we have seen, of course, a massive knee-jerk reaction coming in oil prices from the geopolitical tensions. It seems that markets are stabilizing a little bit when it comes to safe haven demands. What are the analyst projections right now of how bad it could get for the oil markets?
So I think what's important to note is that prices are already up like more than 5.5%. That's where Brent is today after rallying over 13% last week. I think what people are concerned about right now, and this has been talked about every time the Middle East crisis comes up, is concerns that Iran could close the Straits of Hormuz. Now, the Straits of Hormuz handles over a fifth of global oil supply, and the concern is if the conflict escalates further, that strait could be closed. Now, it's worth bearing in mind that Iran makes the threat, the concern that the Straits of Hormuz would be closed comes up every time this sort of conflict develops. But in history, the straits have never been closed. Now, let me say that again, the straits have never been closed. But of course, people are concerned that any closure could affect oil supply.
What's the next sort of catalyst that the markets are looking for? Is there a line in the sand?
I would say that right now, one closely watched psychologically significant barrier is whether Brent will go above $80 per barrel. Right now, it doesn't look like that. Brent has already pared some of its earlier gains this morning, although we are still up. And I think another thing to pay attention to is what OPEC Plus is going to do, because as we've already seen in the past 3 months, OPEC has actually announced 3 supersized quota production increases, and people are wondering if that's going to be able to absorb some of the hypothetical losses from Iranian production should Iran's exports somehow be compromised. Another factor to watch, of course, is also whether the US could potentially get drawn into this conflict. As of this morning, like less than an hour ago, US President Donald Trump at the G7 has told reporters that the US is still supporting Israeli air defenses. I think the concern is whether the U.S. will get drawn into the broader conflict should escalations happen beyond what's already happened so far.
Right. Bloomberg's Nicholas Lau there with the latest when it comes to, of course, the energy markets. As we continue to see Brent at around $75 a barrel, but energy prices sort of paring back some of that earlier spike in the Asian session. This is Bloomberg.
I think we need to make sure that Israel has the resources and the support they need, whatever shape that might take, to once and for all eliminate and destroy the nuclear enrichment program within Iran.
We've set them back dramatically, but not enough. And that's why this series of strikes is not going to end today or tomorrow, but only at a period of time which may take weeks, when we are absolutely certain that the nuclear infrastructure, with the intention of weaponizing and threatening Israel, is terminated.
What the president said in his overnight post was a clear message to the Ayatollahs that if you hit America in any way, whether our troops or our citizens or our ships, for instance, then you're going to feel the full force and strength of the U.S. military in a way no one's ever seen.
Former U.S. Vice President Mike Pence there, Israeli ambassador to the U.S. Shery, and Senator Tom Cotton, the chair of the Senate Intelligence Committee, discussing the Iran-Israel conflict. For more, let's bring Kirsten Fontenrose, who's a president at advisory consulting firm Red 6 International. She was previously a senior director for Gulf Affairs at the U.S. National Security Council. Kirsten, really great to have you with us. And we're now in the 4th day of this conflict. There's no sign of the bombardments between the two sides are going to ease anytime soon. What do you make of the timing? Because Israel, obviously, on its part, I thought it was imperative that the attack happen now, given how close the nuclear enrichment program was getting to for Iran. But what does it mean for the longer-term prospect of getting to any kind of compromise or consensus with Iran?
Israel describes it as having given diplomacy a chance. So even before, when the U.S. government said we want to try for a deal, Israel said, we don't think you're going to get one, but we're willing to let you try diplomacy. When and if it fails, we will act militarily. We just want you to be aware of that. The U.S. said, we're tracking. We're going to give diplomacy a try. And to this day, as you just stated, President Trump is not willing to go in on this attack offensively. Things could change that. There are some things that could change his calculus. But at this point right now, in terms of coming to another nuclear deal or another negotiation, that's still something the U.S. government wants. The ideal scenario for the U.S. administration now is for the senior political leadership in Iran to signal that they will be willing to give up uranium enrichment and stop destabilizing activities across the region in exchange for graduated sanctions lifting and a windfall of foreign direct investment. So the door is not closed on the U.S. side. Keeping this door open is one of the reasons the U.S. has not entered into the conflict offensively. From what I hear from U.S. partners in the region, they're being told by Iran, we are willing to come to the table and have this conversation, but we will not do it while Israel is still attacking. So they're hoping that this will be important enough to the U.S. to pull on Israel's leash a little bit and say, we'd really like to see these stop. The question is, will they be able to do that? Will Israel listen to the U.S. on this point? And will the U.S. even see it in U.S. interest to make that request right now, when Iran is very clearly in a lesser situation than Israel is with regard to who's coming out on top in this conflict?
Dangerous is that lesser situation, right? As you say, the ideal scenario and why perhaps the US is keeping the door open, it is for that, détente to come from Iran. But does this attack motivate Iranian leaders even more when it comes to perhaps a conviction that they need nuclear enrichment? And also, is there a gap in terms of what Israel is willing to accept and what the US would be willing to accept in such a deal?
There is a slight gap there. I mean, the U.S. and Israel are very much on the same page. No nuclear program, and Israel says no existential threat to Israel. So they're also looking to eliminate the ballistic missiles program. The U.S. originally said, we want a deal that will incorporate that as well. So if Israel is able to eliminate that program, which it looks like it's on the way to do, then the U.S. would certainly not be upset about it. But really, it comes down to a question about what's more valuable to Iranians. Maybe they do think this is incentive to go for a weapon, but can they even do it? Will they have enough people with knowledge, people with access, people with keys to facilities to actually go that next step? Will they have people left with relationships with other nuclear programs around the world in states that are sympathetic to them to backfill what they've lost, with Israel taking out most of the leadership in many of the facilities? So, the U.S. thinks Iran needs to just decide between no nuclear enrichment and massive FDI, and then a civilian nuclear program potentially that would support growth in a post-oil economy, or retain nuclear enrichment, spiral into economic failure, kind of an oil for food existence, and then a post-oil economy that would likely collapse and likely lead to regime collapse. So it's sort of, do you want regime collapse in the near term with Israel bringing it about, regime collapse in the long term with insisting to enrich, or can we all win by you saying you, Tehran, no longer wish to retain enriched uranium or a weaponization program? You will not pose a threat to your neighbors in the region, including Israel, and will bring in a whole lot of assistance to rebuild your economy. It looks like a no-brainer to folks outside, but the regime is pretty insistent on survival.
Yeah, so what's the state of the regime right now in Iran? Because we have seen those massive blackouts really hobbling that economy. How much of a leeway do they have to continue this conflict?
They don't have a lot, but while you still have there are still hundreds of commanders of the IRGC who really would love to suppress any popular uprising, for instance. And until you have something like that, we haven't seen Israel go for political regime change. They've been aiming for military targets because by most international law definitions, those are legitimate targets in war. So they've refrained from hitting political leadership. For instance, you saw Araqchi struck. He was one of the political leaders, but he was also the head of their nuclear program. So he was considered a combatant in that regard. There's a rumor that Trump vetoed a plot by Israel to strike at the supreme leader. Whether or not that is true, whether that's an American psyop or whether that's true, it still signals that there is room for this regime to come forward, whoever is left in it, whether it's the very senior leaders and then 8 layers down where their action officers are, whether the regime sees we may be facing a fall if we don't take steps to stop the bleeding right now and signal to the U.S. that we're willing to give up that enrichment dream in order to save the rest of the country and save our own skin. So there is still leadership left. The supreme leader, who will be the one to make the call, is still in place. And that's important because then you won't have debates among next levels about who has the right to approach or not approach the U.S. and others about making a deal. He's still there. So it really still will be his call for the time being.
So President Trump spoke to President Putin about this conflict, so much so that French President Macron was asked about Putin's mediating role in all of this. Tell us a little bit about who are the main players in this conflict and who we should keep an eye on, given, of course, the mediation efforts are ongoing right now.
Yes, I mean, you're seeing Iran potentially reaching out, and I've had confirmations from some of our partners that Iran has reached out to some of the countries in the Gulf that have served in mediating capacities in the past. And those are countries that the U.S. generally likes to work with on these kinds of conflicts. So I think their overtures would be accepted. Again, you have to get to that baseline where both are willing to come to the table. So Iran's reached out, but also said the attacks must stop. The U.S. has said we'll talk, but Iran has to agree to give up enrichment. So we may not, the overtures are made, but we still may not be at a place where you can actually reach a deal. I would also watch things like some of the internal negotiations. Here in the U.S., Central Command is arguing for more resources to defend Israel, but you have parts of the Department of Defense in the U.S. on the policy side, civilian policy side, who are saying this is a trade-off debate, and we would have to pull resources from other parts of the world and other partners we need to protect. So watch the internal discussion in the U.S. as well. And then watch Iran's discussions with its proxies. We saw potentially, not confirmed, but that an Iraqi proxy may have sent attack missiles to a U.S. base in Iraq, and that the Houthis have sent munitions toward Israel as well. If it's the case that they're getting involved and that it's with Iran's direction, that will also change the U.S. calculus on what they're willing to negotiate and when they're willing to do it. A lot of different corners to watch.
Kirsten, Fontenrose, always good to have you with us, President at Red 6 International. We have more to come on the conflict between Israel and Iran. Of course, we'll get the market outlook with Nikko Asset Management. Plus, we get analysis with former U.S. Ambassador to Bahrain, William Roebuck, and the National University of Singapore as well. We have more ahead. This is Bloomberg.
Take a look at gold at the moment with that haven demand nearing that record on Monday here in Asia. The escalating conflict between Israel and Iran driving investors in drove towards these haven assets there. Gold climbing over 0.5% on Monday in the Asia session, just about $50 short of an all-time peak that was set back in April. And this sort of contracts as we see a little bit of a pullback when it comes to bullish sentiment on oil. This
Mr. President, can you give us a sense of what you're doing to try to de-escalate the situation between Iran and Israel?
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
President Trump there speaking to a reporter just moments before he flew for the G7 summit in Canada. And attending heads of state at the G7 Leaders Summit this week will be hoping to ease trade tensions. But of course, that's almost taking a backdrop priority when it comes to the need to address the Israel-Iran conflict. Let's bring up Bloomberg correspondent David Gurr, who is already in Banff, Alberta, Canada. And David, great to have you with us. And, we still kind of hear this optimism, or at least the door being kept open by the White House. President Trump saying that we can still do a deal, it's time for a deal. How does that sort of get contextualized going into the G7 meetings, given that the sort of multilateral environment is not really one that the president tends to like that much?
I think that the participants here in the G7 are waiting to hear more specifics from President Trump when he gets here. And I should say he's en route now. He's flying to Calgary, and then he'll go to Kananaskis, where the summit's going to take place properly in a day's time. But what we're hearing there from the president when it comes to giving them some time to fight this out is rhetoric we've heard before when he's talked about Russia and Ukraine, for instance. It's this notion that maybe there has to be something fractious, there has to be fighting for both sides to recognize that they need to come together and forge a kind of deal. So you hear him there saying that, but also we imagine wrestling with the fact that this is a very difficult moment for him and for the Republican Party, because so many of his supporters, so many Americans who supported Donald Trump in the last election, liked his isolationist policies, didn't want him to get entangled in these other conflicts. And that's really where this tension lies. The U.S.'s alliance with Israel, treating Israel as its closest ally, and at the same time not wanting to be drawn in, having to get into another conflict here with Iran.
David, have we seen enough fighting when it comes to trade negotiations? Could we get some deals out of the G7?
You know, I think going into this summit, as far back as last week, there was optimism that we would get some deals announced here on the sidelines. I think that that's largely subsided, and there has been talk of, that coming up on sideline negotiations between President Trump and these other foreign leaders. And we don't have a good sense yet of what those bilateral conversations are going to be like, or with whom the president's going to have them. But it's certainly something that looms large over the whole event. It's not officially on the agenda. There's no part of the agenda that centers on trade itself. But all of these world leaders have been shaken by President Trump coming back into office, ripping up so many trade deals and talking about kind of scuttling that international order. I think all of them have optimism and hope that they're going to be able to come to some sort of resolution soon. And again, before what happened in the Middle East happened, I think there was a feeling that this could be a place where we could see some kind of framework for deals announced, the likes of which we saw with the U.S. and the U.K. a few weeks back. Maybe not a complete, heavily negotiated, very detailed trade deal among nations, but some indication of where they're going to go going forward here. And it's just worth pausing here to say that we're very far along in this 90-day pause period. And what we were promised at the beginning of that was that there would be 90 deals in 90 days. We certainly haven't gotten that yet. So again, while it might not be on the agenda officially here for this event, members of Donald Trump's administration are certainly aware of the fact that time is ticking for them to come to those deals in short order here if they're going to get them done before that pause is lifted.
Our Bloomberg correspondent David Gura there joining us from Bath, Alberta, Canada, of course, is following the G7 summit. And other stories that we're following at the moment, French President Emmanuel Macron has offered to conduct joint exercises with Greenland to improve security amid concerns over President Trump's ambitions to acquire the territory. Speaking in Nuuk, Macron called the U.S. annexation of Greenland a crazy scenario and says he plans to bring up the issue with Trump at the G7 meeting. The Washington Post is reporting that the U.S. is considering restricting entry to citizens of an additional 36 countries. An internal memo covers 25 African nations, including key U.S. partners Egypt and Djibouti, plus countries in the Caribbean, Central Asia, and several Pacific Island nations. The move marks a significant expansion of the travel ban announced by the Trump administration early this month. Taiwan has blacklisted Huawei and SMIC, further restricting China's push to develop advanced AI chip technologies. The two firms have been added to a list that restricts local companies from shipping to them without government approval. The move is expected to limit Huawei and SMIC's access to crucial semiconductor materials, equipment, and plant construction technologies.
Shery, take a look at what we're watching when it comes to the commodity spaces, as we do have some breaking news when it comes to the latest in Israel's campaign in Iran. Fast now reporting that Israel has struck areas in the north and west of Taiwan today, as we see continued that trading of bombardments and attacks between Israel and Iran. President Trump saying that they may need to fight it out before a deal, but that the door there is clearly still sort of open when it comes to negotiations. We continue to watch that very closely, as do markets at the moment. We are still seeing that advancement when it comes to oil markets, but interestingly, WTI options trading are turning somewhat less bullish at this point. We are seeing that momentum playing out in a stronger way when it comes to gold, though, rising towards the record. Let's get more on the markets now with the MLive strategist, Mark Cranfield, joining us. And Mark, it's quite interesting that we're starting to see a little bit more of a refined approach when it comes to how energy traders are looking at this situation. Is there a catalyst or sort of a line in the sand for prices that we're watching right now?
Traders are probably watching for actual disruptions in oil supplies, which hasn't appeared yet. It may still do. We've seen situations in the past where we see the Gulf of Hormuz, the risk of that being closed obviously would disrupt supplies a lot and push oil prices much higher. So what traders are pricing in for the moment is that prices stay probably a little bit below $80 a barrel. That's an increase that they can deal with, that they can factor that into their bond markets, into currencies, into other commodities and equity markets as well. But it's not a devastating impact. It will slow global growth to some extent. They can price that in as well. But it's not the kind of shock it would be if oil prices suddenly jump to $120, $130 a barrel. We've seen some insights from Bloomberg itself at the end of last week saying that if we get to 120 or higher, that clearly is a very big impact on the global economy. Central banks around the world would need to react to that. And obviously what it would do to risk assets is a much more serious situation than we currently have. It's very fluid. The conflict is still going on. It could go on for some time and traders will need to be highly alert. But if oil prices stay in the $70 to $80 range, it's something that traders can probably factor in. They can look at their past episodes and see where oil prices have gone, and they can probably live with that. That's not going to be huge impact. But if we go above that kind of pricing, the whole picture changes and all bets will be off.
At least for now, it seems that the market seem to be stabilizing. U.S. futures pretty muted. Asian stock futures also pretty muted. When it comes to the Japanese yen actually weakening, despite this today ending up to be a perhaps risk-off trade. So what is moving the markets? Because I guess what I'm trying to say is a very busy week here in Asia. We do have the BOJ, we have the FOMC, and I think we have barely talked about the fact that we have China activity data out later today as well.
Well, as you say, the oil story is not the only one going on. We have several central banks. And for us in Asia, the biggest one, of course, is the Bank of Japan. And for them, it really clouds the picture here. Governor Ueda has an almost impossible job. When he speaks to markets tomorrow, he's going to hold his press conference. He's going to try and keep investors thinking that the Bank of Japan can raise interest rates again, even though the economic data which is coming through is not very supportive. Although wage prices have been going up and core inflation is relatively high, the overall growth in Japan is not that great. So he needs to measure his words very carefully. He needs to be able to try and persuade investors that the door is still open to higher interest rates because the risk of stagflation in Japan is quite high. But at the same time, he can see that the global picture, the geopolitics that's going on in the Middle East, is making uncertainty even higher for global growth this year. So it's an extremely difficult position for the governor of the Bank of Japan and for the whole team there to try and persuade investors that they can do something about this in the short term when the long-term issues look so cloudy. As far as the yen is concerned, traders will probably see that as being negative. If the central bank's hands are tied, when you have stagflation risks, that probably means that the yen needs to get weaker before it can get stronger. So it certainly means that whatever happens in terms of haven flows into the dollar or into gold, into any other asset, the yen itself, in terms of yen crosses, is probably in for a pretty tough week.
Mm-hmm. And live strategist Mark Cranfield there with an outlook for the Asian markets, of course, a busy week to contend with. This is Bloomberg. We're less than 20 minutes away from the Japanese market opens, and we're seeing the yen weakening against the U.S. dollar at that 144 level. Of course, we had seen a significant strength given the geopolitical tensions in the Middle East, but that's really waning in this early Asian session. We'll be watching JGBs as well because they rose on haven demand last week. And of course, we have this conversation with the Japanese Finance Minister coming up, Katsunobu Kato, stressing the need to attract more domestic and foreign investors to the Japanese government bond market as the BOJ reduces its bond purchases. He also told me exclusively that a dialogue with market participants is key to ensure stable bond buying.
While how to manage interest rate policy is basically under the purview of the Bank of Japan, we, the Finance Ministry, are in a position to issue the bonds and sell them stably. Therefore, the Finance Ministry is responsible for the JGB debt management policy in that sense. Therefore, we are engaging in thoughtful and careful dialogue with the market, and we do decide, for example, the composition of short, medium, or long-term bonds and other matters every year and issue accordingly. The Ministry of Finance will decide these sorts of things and execute accordingly. Every year, we make an annual plan for bonds. That is because we believe that it's important to give predictability and foreseeability for investors so that they will be prepared to invest in government bonds. The annual plan clearly states that it can be changed during the fiscal year. In any case, as I just mentioned earlier, we are engaged in thoughtful and careful dialogue with the market, and it is incumbent upon us to make sure that government bonds are being bought. That's our job.
We have seen a lot of interest from foreign investors when it comes to JGBs. PIMCO thinks the 30-year JGBs are really interesting at this point. Are you concerned that that could raise volatility in the markets when you have more holders of JGBs outside of Japan?
So first of all, because the Bank of Japan is gradually reducing JGB holdings, we need to find other investors to hold them. In a sense that government bonds will be purchased stably, with foreign exchange risks and other factors in mind, I do admit that it might be more stable for the JGB holdings if there were more domestic holders of government bonds. But overall, whether it may be domestic or international holders of JGBs, what is most important is that the government bonds will be purchased. Ministry of Finance officials now travel to other countries in order to advocate and deepen the understanding of investors over our government bonds. And I think that such efforts must continue going forward.
How do you attract more domestic holders who tend to be more long-term, that won't flee the market, that will hold on to JGBs as they invest in this economy?
First of all, I would not necessarily agree that domestic investors will always be longer-term holders. And so, as I mentioned earlier, it is also up to the nature and the character over the funding that the investors have been collecting. And so it is not necessarily that domestic investors are long-term holders and the non-Japanese might be shorter-term holders. Looking at the market, indeed, there are non-Japanese longer-term investors, and investors make their respective decisions in accordance with the circumstances of the time. I also think it's necessary to design bonds so that various investors can buy our JGBs easily. For example, we're thinking about designing new lines of government bonds, for example, floating rate JGBs. We do have retail JGBs, and we might expand who will be eligible to invest in such retail JGBs, for example, non-financial business institutions as well. We're making efforts to create an environment where JGBs are more easily purchased by enhancing diversity of bond products.
Japanese Finance Minister Katsunobu Kato speaking exclusively to Bloomberg there in my conversation at the Finance Ministry. And of course, we will get a review of BOJ JGB tapering and that schedule when we get the BOJ policy decision on Tuesday. Expected to keep the rate steady. Joining us now is Kazuo, Momma, executive economist at Mizuho Research and Technologies. He was previously an assistant governor at the Bank of Japan. Momma-san, always great to have you with us. And it's such a difficult week also because we do have, of course, the ongoing geopolitical tensions, oil prices rising at a time when inflation in Japan has been above, 2% for years now, 3 years? Could that at all affect the calculation if oil price trends continue?
Well, in the short term, I think the recent event is actually adding to downside risk to Japan's economy or global economy as well. I think the concern for the BOJ is to be downside of the economy rather than upside of inflation. But in the medium term or long term, actually, as you mentioned, we have already experiencing 3% inflation for the last 3 years. And also, Russia-Ukraine conflict is not over yet. And recent Middle East tension is actually added to another uncertainty. So I think in the medium term, more supply-side shocks could hit the global economy more often. So this could be potentially a more underlying trend of inflation could be higher in the medium to long term. So this might be a consideration for the BOJ in the maybe 4 or 5 meetings ahead, not immediately.
But immediately, the concern, as you said, is a downside in the Japanese economy,
yes.
right? At a time when we have so much uncertainty over tariffs as well. Could we get that Trump-Ishiba, perhaps a trade deal around the G7 summit? And if not, how much more difficult is a stagflationary picture in Japan? And could we see another technical recession here?
Well, actually, still, whether the deal can be made between the Ishiba administration and Trump administration at the end of the summit is still open question. And also, even if there is some deal between the U.S. and Japan, how the Japan corporation will react to that deal is another source of uncertainty. And also, it's not just Japan, but EU, China, or all major trade partners of the United States, they have to also come up with some deal, and that have a lot of implications for global economy. I think still a long shot for the BOJ to come up with any conclusion right after this summit. It takes more time for the BOJ to digest what all those series of events could implicate for Japan's economy.
Domestically, is the issue of real wages still lagging one of the major ones when it comes to what's holding the BOJ back or should be holding the BOJ back?
Well, domestically speaking, I mean, Japan's economy is in a relatively good shape, but with a lot of uncertainty going ahead. This is the situation that BOJ is now facing now. So I think the step BOJ is going to take this time around, tomorrow's meeting and also the Mr. Ueda's conference, he probably be saying that he will be patient for some time to come up with a more clear idea about what the development of global Japanese economy will play out going forward.
What sort of fiscal measures could we expect, or further supportive measures could we expect to get that real wage growth up towards the target?
Well, that is a very good question. Actually, many people are suffering from very low real wage growth. Actually, sometimes negative, sometimes positive. Month-to-month fluctuations very, very volatile in here. But average out around zero real wage growth is something we can observe right now. So Ishiba administration trying to come up with the idea to raise the trend growth of real wages to 1% within the 5 years' time. That is a very ambitious objective. So I doubt that how the government will be able to deliver that promise of 1% real wage growth going forward. But I think at least could be some positive territory for many people to be more happy about the situation right now. And from the point of view of BOJ, real wages, it is important, but at the same time, more important for the BOJ is nominal wages and nominal prices development. So even though people are not so happy about the economy, BOJ still could go ahead, at least as long as the wage price dynamics in nominal basis is unfavorable for 2% price objective.
So when do you expect them to move?
Well, there is another million-dollar question. As I mentioned, there is a lot of the development going forward, trade negotiation and the Middle East development. But in my view, BOJ has to be confident about the next spring wage hike, 2026, which means that
could they wait that long until they make their next move?
They don't have to observe exact number of the spring negotiation, but there are some good indication before that another spring wage will be delivered next spring. So I think the profitability of the corporate sector and also sentiment of the business people and also more inflation wage development environment for the rest of this year, I think those key elements will actually shape the environment where how the next spring negotiation will take place.
And we have, of course, been talking about the volatility that we're seeing in the JGB markets, and that was sort of key of my conversation with Finance Minister Kato.
Yes.
What sort of reviews are you expecting from the BOJ when it comes to those bond purchase reductions?
Well, actually, BOJ still have existing bond reduction plan until 2026, first quarter 2026. That is the 400 billion reduction each quarter. That kind of plan, I think that will be in place by this meeting as well. The question is what the BOJ will do after first quarter of the 2026, because there's no plan yet. The market consensus is that the BOJ will continue reducing JGB purchases beyond first quarter of 2026, but actually a slower pace in terms of the reduction of the JGB purchases from 400 billion yen currently per quarter to 200 billion yen per quarter. So half of the pace is now expected by market. So by that way, BOJ still continue reducing the bond purchases, but at the same time, BOJ try to minimize any risks that it could be making any turbulence in the bond market.
Yeah, with the super long end yields continuing to surge. Thank you so much for joining
Thank
us
you
here
very
in the
much.
Tokyo studio. Kazuo, Momma, executive economist at Mizuho Research and Technologies. Of course, you can catch Japan Ahead every Monday at 8:40 a.m. If you're watching here in Tokyo, subscribers can also watch live on the terminal using the TV Go function. This is Bloomberg. Take a look at some of the stocks that we'll be watching when trade opens in Australia, Korea, and Japan. We'll be watching shares of Santos as the Australian gas producer gets a non-binding indicative proposal from a consortium led by a unit of Abu Dhabi state-owned oil company Adnoc. Santos saying that it intends to recommend shareholders to vote in favor of the deal. Also, keep an eye on Nippon Steel, which has won conditional U.S. approval for its $14.1 billion purchase of U.S. steel. The deal is expected to close by June 18th, creating the world's second largest steel maker. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. Counting down to Asia's major market opens, and of course front and center geopolitical tensions, Haidi, as the Israel and Iran conflict escalates, not to mention that of course we're watching the G7 meeting in Canada as well.
Yeah, really, President Trump's leadership and really that narrative as to what role the US continues to play in this will be front and center. Also a big day today when it comes to Chinese domestic activity data, right? Just a few days ago, we were still watching very closely any further developments on trade going to the G7 this week as well, Shery.
Yeah, China economic data not necessarily expected to see big upside when it comes to activity numbers, especially when it comes to those retail sales numbers. But of course, busy week also because we have central bank decisions here in Japan, not to mention the Fed, the BOE as well. But take a look at how the Japanese market is coming online, because we're seeing a little bit of weakness against the US dollar, the Japanese yen now trading at that 145 level. And we're seeing the Nikkei now gaining 0.6% after we saw those losses in the previous session because of these geopolitical tensions when Israel attacked Iran. And we saw actually those exporters taking a dive. The topic's now gaining 0.7%, but we'll be watching the JGB sector very closely as well. We saw them rising on that haven demand in the previous session, right now holding at that 142 level on a week when we are expecting the BOJ, of course, to come out. No rate change expected from the Bank of Japan on Tuesday, but what we'll be watching is the review of the JGB purchase reductions, of course, that the Bank of Japan is carrying out in order to normalize policy. We have seen a lot of fluctuations in the super long end Korean yields. Take a look at how Korea is coming online as well, because now we heard from the Finance Ministry that the Korean government will take market steps if the Middle East tensions raise volatility in the markets. They will provide financial, shipping support as well to exporters. You can see the Korean won continuing to weaken against the U.S. dollar, down 0.3%. A little bit of a mixed picture when it comes to the Kospi and the tech-heavy Kosdaq as well. But of course, it's all about really oil prices at the moment and what the transmission mechanism could be for consumers on this side of the world, Haidi.
Take a look at what we're watching when it comes to the start of trading here in Australia. And one of the sort of corporate stories we'll be watching is Santos, right after we had that takeover announcement from Abu Dhabi's Adnoc there. This is the state of play when it comes to the start to trading, a staggered session, a little bit to the offside. We're watching the ASX as well, ASIC beginning its probe into the exchange operator due to what it sees as repeated deficiencies at the stock exchange operator, focusing on governance and risk management. Pretty scathing comments there from ASIC as it heads into this inquiry. We'll also be watching that sort of FX side as well, given the leadership that we've seen, the recovery, I should say, of the US dollar. But the Aussie dollar, interestingly, up by about just 1/10% at the moment. And also treasuries, given the haven demand that we have seen, particularly playing out when it comes to gold in that haven demand story. This is what treasuries at the moment are doing after, of course, what has been a pretty difficult time when it comes to that longer end of the trade in particular. But we have seen sort of treasuries more or less losing some of that haven shine in favour of other plays, the likes of gold.
And Haidi, joining us now is Naomi Fink, Chief Global Strategist at Nikko Asset Management. Naomi, always great to have you with us, especially when we're trying to digest so many different news bits at the moment, geopolitical tensions, oil prices, but also, of course, central bank decisions. And the big one here in Asia is the BOJ. What will be really driving the markets in the short term, at least?
Well, I think for the BOJ, the challenge is how to maintain its resolve in the face of higher than target inflation, yet probably offer the best policy mix for the shorter term, what's going on in the markets. And I would emphasize a kind of whole balance sheet approach. Of course, if the Bank of Japan were to turn around and stall the balance sheet reduction or increase the balance sheet, that would send the wrong message when it's trying to keep inflation under control. However, I know that bonds are the biggest component that everybody's watching, but there are also other things like, emergency lending facility and so on. So what I would look is for it to continue decreasing the whole of its balance sheet over the course of many quarters, and probably at least you might be able to change the timing a little bit. You might be able to slow a little here while keeping something else that's reducing the balance sheet. So I would expect it to adopt that type of approach instead of really changing its signaling.
And of course, you mentioned the inflationary concerns in this country. How much more difficult does the picture become, not only for Japan, but for the region when we're looking at oil prices that could potentially continue to rise? And what are the market implications for those sectors?
Well, recently, we actually saw a bit of good news on inflation, both in Japan and in the U.S. And then I think a lot of the market really is counting on those basis effects to kick in later this year. So we actually do get a graceful glide down to target in both the U.S. and Japan. Now, of course, what we've seen in the oil markets, for example, that some other factors, like, for instance, supply factors, they have the potential to offer surprise disruptions. And if so, then, of course, central banks are going to have to be much more on their guard for inflation than I think everybody was expecting. So while we're hoping for the best, we're hoping for prices to remain controlled, basis effects to kick in, and inflation to slow down, then, of course, we are in a period of uncertainty, and there are things that could disrupt that.
Does the geopolitical chaos have any implications for how treasuries, particularly longer-term treasuries, might fare?
Well, I think we have seen a bit of back and forth on the longer-term treasuries as well. It seems to be a characteristic of developed bond markets that we have a little bit of volatility in the long and super long ends at the moment. So probably if we do get some bad news, then it's this section of the yield curve that can most quickly react to it. So I don't discount that. I think we probably are in a higher volatility regime across asset classes. And I think if we do get deviation, for example, from fiscal responsibility, or we get a supply-demand glitch, then that part of the yield curve is vulnerable.
Naomi, when you take a look at some of the sort of more evergreen topics, the likes of trade, for Japan, do you think that is sort of still the dominant concern, or is it more about the fact that investment still remains pretty resilient?
Well, I think that if we take a look at trade versus investment in Japan, it's very clear, if we look at the current account, that investment is the larger part. Investment income, in fact, is the larger part of the current account. So Japan invests abroad and reinvests that income abroad. And if it sees not enough reason to see continuation in that gap of investment income abroad versus in Japan, then, of course, it always has the choice to repatriate. So I think that's probably the greater question at the moment. You know, remember, Japan is one of the largest global surplus economies. So what it does with those surpluses really matters.
When it comes to the broader tariff picture right now, we could potentially get some positive news on some negotiations and some deals being struck around the G7 meeting. How supportive would that be of risk assets across Asia, given that also we have seen a significant rally recently?
So risk assets have tended to be responsive to good news on trade. The only thing, as we've seen recently, is that even if we get some sort of détente, that can also be quickly unseated by new news following. So we don't really see a whole lot of certainty, and I anticipate that since the economy as a whole is not doing that badly, I mean, most economies around the world aren't yet doing that badly, so then probably good news is going to be rewarded. It's just, is that going to stick? Most likely not. We are in a higher vol regime, especially if we get bad news.
Naomi Fink, Chief Global Strategist at Nikko Asset Management, of course, as we also continue to watch for that potential meeting between President Trump and Prime Minister Ishiba of Japan as well, Haidi.
Let's get more when it comes to the ongoing conflict between Israel and Iran. We're bringing in Bloomberg editor Michael Hale. So we've heard from President Trump saying we can still get to a deal. It's time to make a deal. He's headed to the G7, of course. The role of the US in sort of all of this has been quite interesting over the past few days. How easy is it to get back to negotiations? Because I think, you know, you're either in the camp to say that this weakens their bargaining position and there's more willingness, or incentivizes them to persist with their nuclear program.
Yeah, I mean, it's hard to judge from a distance, Heidi, but you're right. President Trump is almost covered all bases. You could always call it politely strategic ambiguity. I mean, he said there could be a deal. He's also said the US could get involved in the conflict. He's also
they should fight it out a bit
they
more,
should fight it out exactly as well. So we've had a few ranges there. I mean, I think underlying it all, clearly the US is sticking by Israel. I mean, the question then is the judgment of the Iranian regime. I mean, how strong do they feel? How badly do they need peace in this situation? I mean, they're not a very popular regime at home. Does it rally the population to them? These are questions that are unknown. But if they feel strategically weakened, I mean, it would be a big backflip, but they could still make a deal. Alternatively, they make the run for a nuclear weapon, that perhaps they just try and cop this, and we're not really sure where they stand. I mean, how close they are, presumably very close, and that they view perhaps having a nuclear weapon as the only insurance really at the end of the day that they've got. So it's really, really up in the air. And the other question is, you know, Israel doesn't really have the weapons to get the job done here, is the general strategic analysis. So if the US isn't involved, I mean, how much damage will Israel do? And is it self-defeating in a sense in what it's doing now? Could they have done better just mediating or getting an agreement? So, yeah, there's a lot in flux at the moment.
And Mike, what's the assessment of where Iran stands in all of this, especially with its nuclear capabilities, also military capabilities? Because it was really interesting that their retaliation was so swift. Usually it takes days or even weeks for them to respond.
Yeah, I mean, well, I guess it's a slightly different sort of situation to the last one, Shery. You know, last year Israel had they'd taken out the head of Hezbollah, and Iran felt obliged to respond once it's a direct attack like this on the country, then it was always going to be that they needed to cause some pain for Israel as well. I mean, they've got a reputation to think about. They've always been the sort of the power in the region. They have, at least for the last 20 or 30 years, and they do need to maintain that. But as I was sort of alluding to with Haidi, it's very unclear what their status is, because they're not popular at home. You know, there's 40% inflation, there's a lot of unemployment, the economy is stagnating. Their ring of fire around Israel, Hezbollah, Hamas, these sort of groups outside of the Houthis have taken a real beating. And the reason that Israel can do this is the last time that Israel attacked, it knocked out a lot of Iran's air defences. So Israel feels a lot more emboldened in terms of being able to fly its jets over and to attack without the risk of getting a lot of the planes shot down. So Iran's got some real calculations to make. You know, does it need to sort of step back and perhaps try to make some sort of deal with the United States here, and that Israel has pushed it further to that or exposed its weakness? Or does it make the run for the bomb? Or does it just, you know, do we sort of come to a stalemate here where we don't really get anywhere? The question really is whether Iran sort of expands and perhaps tries to attack US assets. The sense is that they won't. They don't need the US in addition to Israel. And the other thing is just, you know, what does Israel expect to gain out of this? Prime Minister Netanyahu overnight was on Fox News, and he wouldn't say anything about whether the US had provided Israel with the bunker-busting bombs, which most people expect that Israel would need to actually get at the heart of Iran's nuclear capability. But he said that Israel has some more rabbits up its sleeve, I think is how he described it. And we've seen in the past that they have produced some quite spectacular successes. Now, whether this is bluff, whether this is real, we really don't know. But, you know, it's an extraordinary time we're observing.
Bloomberg editor Michael Hale there with the latest. We're also watching some of the energy stocks very closely, but in particular for a separate reason when it comes to Santos. We're seeing this big jump, and in fact it was up by about 15%, just pairing some of those earlier gains in the session after a unit of Abu Dhabi's National Oil Corporation making an all-cash bid for Santos, valuing the oil and gas producer here in Australia at $18.7 billion US. So that's a $8.89 Aussie per share price, about a 28% premium to the closing price on Friday. So all of this will help Adnoc become a major supplier of liquefied natural gas. Santos' board intending to unanimously recommend that bid to shareholders, still seeing that gain holding of about 12.5%. More ahead here on the Asia Trade. This is Bloomberg. Well, President Trump is heading to Canada for the G7 Leaders Summit, where he's set to be centre of attention. Trump says he expects trade deals to be struck at the gathering. Leaders may also attempt to influence his approach to the Israel-Iran conflict.
Mr. President, can you give us a sense of what you're doing to try to de-escalate the situation between Iran and Israel?
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
Well, the Australian Prime Minister, Anthony Albanese, is one of those leaders to meet with President Trump. That's set for Tuesday on the sidelines of the G7 in Canada. The fate of the AUKUS defence pact in doubt. Bloomberg's Paul Allen joins us now for more. And of course, there is a lot going on for President Trump, both domestically, globally. It's funny, just a few days ago, trade was going to be sort of the big topic, right? And AUKUS was, the review was causing quite some consternation. What do we expect to be discussed here?
Yeah, Anthony Albanese held a press conference a short time ago, and in a classic understatement said, we've got a few things to talk about. And You're quite right, the tariffs were going to be top of the agenda until the AUKUS review was announced by the US last week. So Anthony Albanese says, look, we'll have a discussion about that, as friends should. He intends to highlight the benefits for the United States and Australia's contributions, which has been $325 million so far, with billions more to come between the US, Australia and the UK. $361 billion is going to be spent over the next 30 years. if this deal is cancelled, it would not just be bad for Australia. The UK's got an even bigger stake in this. Keir Starmer, the British Prime Minister, says he's confident a deal's going to proceed. And he said, look, when he got elected last year, the UK also conducted a review. So he's framing this very much as, normal piece of business. From the US perspective, yes, this is a Biden-era agreement, but it still ticks a lot of boxes in terms of increased defence spending and building up US military manufacturing as well.
And Paul Allen, what a good time to get also the latest Lowy Institute survey on public sentiment in Australia. How do Australians feel when it comes to President Trump and his administration?
Well, you could probably guess, and you guess right, 72% of Australians don't trust President Trump to act responsibly in terms of global affairs. Trust in the United States as a global player, that's at 36%, and that's the lowest that this survey has recorded in its 20-year history. However, at the same time, 80% of Australians agree that the US is important for Australia's security. The survey also asked about China as well, and similar results. 71% of Australians don't trust Xi Jinping to do the right thing in terms of global affairs either. So it just really underscores this tension between China, Australia's largest trading partner, the US, Australia's greatest ally. In terms of who would be a better partner for Australia, that question got the answer an even split between President Trump and Xi Jinping at 45% apiece. So, I guess the overall takeaway is with friends like these.
Bloomberg's Paul Allen there. Another story that we're following here, and shares of ASX are lower after Australia's market regulator has launched an investigation over what it calls repeated and serious failures. ASIC says an expert panel will assess governance, capability and risk management frameworks at the exchange. ASX acknowledged the seriousness of the action and pledged its full cooperation for the inquiry. More ahead on the Asia trade, this is Bloomberg.
A unit of the Abu Dhabi National Oil Company has made an all-cash bid for Santos that values the Australian oil and gas producer at $18.7 billion. The Santos board intends to recommend its shareholders vote in favor of the deal. Steven Sapczynski leads our Asia energy coverage and is in Tokyo today. So good to see you in person.
Tokyo.
After so many years.
For so many years, I'm in Tokyo.
And such a perfect timing to have you here, given that we have this huge news on Santos and the geopolitical tensions and around oil. But this deal, why does it make sense for Adnoc?
It makes sense because Santos is a major producer of what we call liquefied natural gas. And that is the fastest growing fossil fuel market today. So Adnoc, traditionally an oil supplier, is looking to shift to LNG and natural gas. They think that with the energy transition, there will be more companies switching from coal, switching from oil to gas. It produces less fossil fuels less CO2 when combusted. So their view is they think that LNG demand will grow rapidly in Asia, and the best way to expand isn't necessarily just building their own plants, which they're doing at home, but also buying plants abroad. So they want to buy into assets that produce LNG. They've done that in the United States. We had a story last week about them looking at potentially BP's natural gas assets, and then they're also now made a pretty big offer at quite a large premium for Santos, which has investments in two pretty big LNG plants in Australia as well as Papua New Guinea. So that together illustrates that that Adnoc really wants to expand into the LNG space. They see it as a future growth place, and I think it really indicates where the market is going in the future.
Does it have implications for the broader LNG sector or industry?
I think the indication here is that we might be coming into a potential M&A boom for LNG. If you want to get a piece of this action and you want to build a new plant, it will take you 4 or 5 years. But if you want to be in it right now, you can buy some companies, and there are companies that are undervalued. There are projects that are undervalued. I mean, I mentioned we not only have Santos, but there are facilities across the United States that are all either operating, they're under construction. Those are also potentially fair game for companies that are cash rich, like, Adnoc, maybe even Aramco, and want to get into natural gas. They want to get into it fast. Now, I think another thing that potentially indicates is that the industry, the oil industry, really does believe that gas demand will grow. There is this fight going on because gas is still a fossil fuel. Whether we're just going to shift quickly to renewables and the use of gas, maybe it will peak over the next few years, but then fall down as we switch over to solar and wind. But I think this truly indicates, and the money they're putting forward for this indicates, that gas is here to stay. And it's not just a bridge fuel for these companies. They see it as the destination. So they expect demand to not only be here in the 2040s, but even the 2050s, when much of the developed world is hoping to be net zero.
So when you're expecting more M&As and deals like this, are we talking about the similar terms of deals just globally in every region?
Yeah, absolutely. I mean, I think obviously Santos is one of the low-hanging fruit here in Asia. Asia is dominated by a lot of state-owned companies. So you have Petronas in Malaysia, you have Brunei's LNG project, and you also have Pertamina in Indonesia. Those guys will be hard to, purchase. You can't buy a state-owned company that easily. But there are independent companies across the United States Gulf Coast. There are also potentially, projects that are cropping up in parts of Africa that could be investment destinations for some of these pretty wealthy energy companies in the Middle East that are looking to expand rapidly into LNG.
Steven Sobczynski, really good to have you with us, especially here in Tokyo. He leads our Asia energy coverage. And of course, plenty to cover in this sector today. But also here in Japan, we're watching one stock, and that's Nippon Steel. We are now getting that conditional U.S. approval for that $14.1 billion purchase of U.S. steel. The deal is expected to close by June 18th. And this would create the world's second largest steel maker. Of course, we have been watching these developments around U.S.-Japan relations as well, with President Trump expected to meet with Prime Minister Ishiba during the G7 summit in Canada. We are expecting perhaps some progress on that sixth round of trade negotiations, Haidi. But so far, what we'll be watching here in Japan, of course, is the Bank of Japan decision on Tuesday as well.
Take a look, Shery, at how futures in Europe are opening at the moment, as we've seen sort of pretty muted reaction across the equity session here in Asia so far. We are still early in the day, of course, as we continue to monitor these ongoing developments in the Israel-Iran conflict. We're seeing a little bit of downside there across the board when it comes to Euro Stoxx 50 futures, trading in German futures there as well by about 1/4%. The euro more or less steady at the moment, as we continue to see some of that upside over the past few sessions really play out when it comes to the dollar, tepid as that rebound is, and sort of calling into question, I guess, a little bit of that haven demand role as well for the greenback. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to energy markets at the moment. Obviously some upside, and we clearly understand why, as we see the Israel-Iran conflict continuing to stoke these supply concerns. But it's interesting that when you take a look at WTI options volatility, the call skew, both starting to pull back a bit. So that stretch premium for near-term calls, really difficult to maintain in the absence of a further catalyst. That sort of line in the sand, we're looking at around the $80 a barrel mark when it comes to potentially the next key levels for pricing momentum. So it does look like when it comes to oil market pricing at the moment, we're seeing a little bit more of a muted reaction in the early part of the Asian session compared to, for example, what we saw in the reaction on Friday. But let's get more when it comes to what we're watching when it comes to Iran and Israel. Let's bring in William Roebuck, who's the Arab Gulf States Institute Executive Vice President. He's also a former US Ambassador to Bahrain. Really great to have you with us. And let me start off with what sort of the possibilities are ahead for the regime in Iran, right? Does this attack potentially embolden the nuclear capability ambitions and make it sort of a stronger conviction that they need to be progressing the enrichment program, even if it needs to be obviously rebuilt from the damage that's been done? Or does it open up the opportunity for a back down and more negotiations with the US?
Thank you, Heidi. I mean, I think they're trying to keep their options open right now. they're looking carefully, weighing the damage that has been done, that Israel has managed to inflict on their facilities, their nuclear facilities, and on their leadership capabilities. There have been severe attacks on their top leadership command structure in Iran as well. I don't think they've made decisions about the route that you're talking about, whether they should pursue a so-called race to get the nuclear capability, the bomb, or if they should negotiate it away. I think they're looking at it right now. They're looking for ways to inflict some costs on Israel as a deterrent and for ways to entice the United States to get involved and restrain Israel and restart some negotiations. I think that's what they want to do in the short term.
How much could they exploit the gap that seems to be between the US and Israel in terms of the comfort levels of how much enrichment is going to be allowed?
I think that was a fairly significant issue before Israel launched the attacks. I think really Israel was, concerned that there could be a possible nuclear deal between the United States and Iran that might have left Iran with a limited path for continued uranium enrichment, which Israel deeply opposes. Now that they have launched the military attack, I don't think that gap that you're talking about is as significant, at least in the immediate term. I think right now the United States would more likely be focused on just getting the fighting stopped and some negotiations started again. But I'm not sure that the U.S. at this point, given how Israel has responded, that the U.S. would maintain a position of allowing Iran to maintain any kind of uranium enrichment capability.
So how much of an active participation could we expect from Washington, and what would it look like?
It's a good question. I think right now Washington is weighing its options. They're trying to signal that they support Israel, that they have its back. President Trump has also, however, tried to signal that he remains open for a diplomatic settlement, that he hopes that there will be some sort of diplomatic settlement. So my assessment right now is that the U.S. is keeping its options open. I believe, given their previous push for a diplomatic settlement, their preference would be to get back to a negotiated settlement. But in some ways, I think the U.S. approach so far has been they want to have their diplomatic cake and eat it too, so to speak, with the negotiations with Iran and also supporting Israel's approach. And I'm not sure they're going to be able to find a way to satisfy both of those imperatives.
So, Ambassador, when it comes to Iran, what are Iran's options at a time when we've seen a rather rapid retaliation coming from the regime that usually would take more days or weeks sometimes after Israeli attacks?
Mm-hmm. I think those attacks will continue. They may be constrained if this thing drags on for weeks. They may be constrained about their ordnance levels, about their level of missiles that they have to fire. They may also, if these attacks from Israel continue and are able to mount sustained pressure on the survival of the regime itself, the regime's appetite for risk might go up, and they may consider other options. Right now, I don't think they're on the table, but they could consider attacking some of the Arab Gulf capitals in the region in order to try to force the U.S. to get involved and to turn this thing off diplomatically. As I say, for now, that's off the table, but I think Iran's appetite for risk could go up if this Israeli military attack is sustained and intensifies in the coming days and weeks.
Will we see other players emerge in this conflict as well? For example, the influence of, say, Chinese actors, given that we have seen that relationship change with Saudi Arabia and Iran as well.
The Chinese were very active in facilitating diplomatic de-escalation and rapprochement between Iran and the Gulf states, the Arab Gulf states, a couple of years ago. That rapprochement has continued and is a very important factor right now. The United Arab Emirates, Saudi Arabia, Bahrain, the other Gulf states have pretty good relations with Iran and open lines of communication, which I think keeps the situation for now relatively stable. I think the Chinese could take some credit for that, for sure. I think the Chinese also have an economic interest because of their oil purchases from Iran. If Iran's ability to produce and export oil is disrupted, I think China would have to look elsewhere for some of its oil supplies.
We also know that despite warm relations with Russia, Russia is obviously pretty well engaged in its own conflict. But a lot of the sort of discussion has been the timing, and Israel obviously wanted to undertake this attack while the so-called axis of resistance countries, or groups, I should say, were weakened. Is there any possibility of these proxies coming back into the play in this conflict, do you think?
I don't. I think these proxies have been devastatingly weakened. I think Hezbollah, for example, has suffered devastating setbacks. They're not able to fire the missiles that they used to be able, had the capability of firing into Israel as a way to dissuade coercively Israel from attacking Iran. That deterrent is no longer there. In general, I think Israel has assessed correctly that it is dominant militarily right now in the region in a way that opens up opportunities, and it wants to exploit those opportunities. And that's why it's one of the reasons, a dominant reason, that it has acted so decisively to attack Iran at this point. Also, the attacks on Iran last fall have weakened its air defenses. So Israel senses that it really has an opportunity right now to attack with decisiveness against Tehran.
William Roebuck, thank you very much for your time today. Former U.S. Ambassador to Bahrain and Executive Vice President at Arab Gulf States Institute. It was really great to get your insights. We have more ahead. This is Bloomberg. We'll be watching Taiwan semiconductor names today after officials blacklisted 2 Chinese tech giants over the weekend. Huawei and SMIC will be further restricted from accessing the tools necessary for building AI chips. Let's get more with our reporter Annabelle Drewlers there joining us from Hong Kong. Belle, how much of an impact could this have on China's tech ambitions?
Well, ultimately a pretty significant one. I think that the names that you really mentioned there, so SMIC and Huawei, these are at the center of China's efforts to try and build out its own semiconductor ecosystem that can compete against the likes of NVIDIA, but also names like TSMC, of course, in Taiwan. So this is a very damaging move. But just to get into some of the details here, so essentially at Taiwan, it maintains a so-called strategic high-tech commodities list. So it's basically names or entities, groups that could be considered as bad actors like Al-Qaeda, the Taliban, they've been on it. But now this list has been expanded, and so it's going to have, or it does have now, since it was updated over the weekend, 600 different entities that are named, and that includes Huawei and SMIC for the first time ever, plus some of their subsidiaries. So what it means for companies that are operating in Taiwan in the semiconductor ecosystem, it means that if they're looking to export any technology, any equipment, any materials to those names like SMIC, Huawei, their subsidiaries, they're going to need to seek approval first. And so essentially Huawei and SMIC have both been blacklisted now by Taiwan. Already companies that had been on the entity list from the US, so they had already been facing challenges in acquiring semiconductor technology. But as we've been reporting at Bloomberg in the past, particularly for Huawei, they have been finding ways to get around this. And so they've still been able to acquire that technology from Taiwan. It'll be interesting to see if these measures or this latest effort has the intended effect of really restricting these companies' access.
This is really a sort of first such move against Chinese tech companies for Taiwan.
Yeah, that's right. So we've seen blanket bans in the past on things like exporting certain chip making equipment, like lithography machines, for instance, from Taiwan to mainland China. But this is the first time ever, as I said, that we've seen leading Chinese tech companies or chip makers on the entity list. There are a couple of different dynamics that are worth pointing out here. Firstly, you've got the rising tensions between Taipei and also Beijing. And so we saw earlier this year, for instance, the Taiwanese president, Lai Ching-te, calling China a hostile or a foreign hostile force for the first time ever, and also bringing in different measures to try and counter infiltration efforts. But also at the same time, you've got these trade negotiations that are ongoing between Taipei and Washington. And we know that Taiwan is trying to really put itself, or the best foot forward, essentially, to try and get the best trade deal and relationship with Washington moving forward. Interesting to know if this effort was really part of that. But as we said, Taiwan adding Huawei, SMIC to its entity list, they will be restricted, or local companies will be restricted from shipping to them without government approval. So again, actually, we can watch SMIC at the Open in Hong Kong in about 45 minutes from now.
Annabelle Jewellers there, and take a look at what we're watching when it comes to futures trading. And obviously that's one sector that we're watching quite closely, those chip stocks in China, as the imposition of those tech controls from Taiwan comes into play there with that narrative. We're also watching some of the Chinese property stocks after another government initiative plan to promote more efforts to stabilise the ongoing sort of languishing that we see in the real estate market. And all of this, of course, feeding into a big day when it comes to that domestic activity data dump. Analysts think that the Chinese economy may have ridden out the tariff roller coaster last month, with government stimulus front-loading by exporters offsetting these big shocks. Let's bring our China correspondent Min Min Lo in Hong Kong. So what are we expecting in terms of the eco data in a few hours, and how much does that reflect the ongoing truce that still is holding between Washington and Beijing?
Yeah, actually, analysts are forecasting a pretty resilient outlook for the economic data, which will be out at 10 a.m. today. And if you look at industrial production, fixed asset investments, those two expected to remain steady. Retail sales, though, slipping below 5%. Property investment continued to deepen that contraction, down 10% or so. But the key figure to watch is that industrial production print, because that is where we can see how China's economy is holding up given those tariffs. And bear in mind, in mid-May already, US and China had come to that temporary truce. We expect to see exporters having front-loaded shipment, as well as the government stimulus, the equipment upgrading subsidies. Those would have contributed to that resilient print on industrial production. But one thing to note, though, a fair warning from Morgan Stanley's Robin Singh, saying that the second half of China's economy could see a greater deceleration. The bigger the front-loading of shipments in the first half of the year, that means we could see a bigger sort of payback in the second half. Retail sales as well expected to be below 5%, and that really shows the challenge that the Chinese government faces in relying on domestic consumption to try to drive the economy.
Ming, what does that mean for Chinese assets after we saw significant support for local equities in the past few months?
Yeah, so the main drivers today will be the economic data. We also had the credit data that came out on Friday afternoon, which shows that government borrowing rather, had been pretty strong, but not so much the private borrowing. And of course, the broader market story, the Middle East conflict is likely to have an impact on markets as well. And you see the Hang Seng futures there, I believe, just coming online, down about 0.5%, not boding very well for the market open later today. But if you look at the longer term trend, so far this year, where are we seeing the biggest gains in China is the biotech sector that has really surged about 60% year to date. And it's driven by some of these mega billion-dollar licensing deals, foreign companies licensing Chinese drugs, which shows how the Chinese market has really been a source of innovation and disruption rather than a laggard. And so that is where that's certainly something to watch. And if you look at the chart there, you can see the Hang Seng biotech sector outpacing the Hang Seng Tech so far this year. And one good thing in a way that has come out of the US-China trade tensions, according to a fund manager at Franklin Templeton, he's saying that there's actually a flow back of these talent, overseas Chinese talents that are coming back to China, given the unfriendly environment overseas and given that China is now trying to create a better environment to support its own domestic R&D sector.
Yeah, Bloomberg's China correspondent Min Lo there with the latest on China. We have seen the A50 futures just earlier today closing to the upside. So we're seeing a little bit more risk-on sentiment across Asia and Japan. The Nikkei now gaining ground with every sector in the green, being led higher by technology and financials. We're also seeing the Japanese yen weakening against the US dollars. We're seeing less of that haven demand, especially in the JGB space, which is under pressure today after rising on Friday. Remember, when Israel launched airstrikes on Iran, we actually saw that haven demand filter through the bond markets. But there's been a lot of volatility in the JGB space, and we are watching that space closely as the Bank of Japan, with its rate decision, will also review JGB tapering schedules ongoing from this year. Japanese Finance Minister Katsunobu Kato is also stressing the need to attract more domestic and foreign investors to the Japanese government bond market as the BOJ reduces those bond purchases. He also told us exclusively that dialogue with market participants is key to ensure stable bond buying.
While how to manage interest rate policy is basically under the purview of the Bank of Japan, we, the Finance Ministry, are in a position to issue the bonds and sell them stably. Therefore, the Finance Ministry is responsible for the JGB debt management policy in that sense. Therefore, we are engaging in thoughtful and careful dialogue with the market, and we do decide, for example, the composition of short, medium, or long-term bonds and other matters every year and issue accordingly. The Ministry of Finance will decide these sorts of things and execute accordingly. Every year, we make an annual plan for bonds. That is because we believe that it's important to give predictability and foreseeability for investors so that they will be prepared to invest in government bonds. The annual plan clearly states that it can be changed during the fiscal year. In any case, as I just mentioned earlier, we are engaged in thoughtful and careful dialogue with the market, and it is incumbent upon us to make sure that government bonds are being bought. That's our job.
We have seen a lot of interest from foreign investors when it comes to JGBs. PIMCO thinks the 30-year JGBs are really interesting at this point. Are you concerned that that could raise volatility in the markets when you have more holders of JGBs outside of Japan?
So first of all, because the Bank of Japan is gradually reducing JGB holdings, we need to find other investors to hold them. In a sense that government bonds will be purchased stably, with foreign exchange risks and other factors in mind, I do admit that it might be more stable for the JGB holdings if there were more domestic holders of government bonds. But overall, whether it may be domestic or international holders of JGBs, what is most important is that the government bonds will be purchased. Ministry of Finance officials now travel to other countries in order to advocate and deepen the understanding of investors over our government bonds. And I think that such efforts must continue going forward.
How do you attract more domestic holders who tend to be more long-term, that won't flee the market, that will hold on to JGBs as they invest in this economy?
First of all, I would not necessarily agree that domestic investors will always be longer-term holders. And so, as I mentioned earlier, it is also up to the nature and the character over the funding that the investors have been collecting. And so it is not necessarily that domestic investors are long-term holders and the non-Japanese might be shorter-term holders. Looking at the market, indeed, there are non-Japanese longer-term investors, and investors make their respective decisions in accordance with the circumstances of the time. I also think it's necessary to design bonds so that various investors can buy our JGBs easily. For example, we're thinking about designing new lines of government bonds, For example, floating rate JGBs. We do have retail JGBs, and we might expand who will be eligible to invest in such retail JGBs. For example, non-financial business institutions as well. We're making efforts to create an environment where JGBs are more easily purchased by enhancing diversity of bond products.
Japanese Finance Minister Katsunobu Kato speaking exclusively to us on Bloomberg. We have more ahead. This is Bloomberg.
Take a look at how US futures are faring at the moment. We're seeing a little bit of upside there across the board. We're also hearing from President Trump as he's talking about the immigration deportation efforts of his administration. He is expressing his support for ICE, saying they must expand the efforts to detain and deport illegal aliens, saying that ICE must expand their efforts in larger cities. And this, of course, as we saw, rallies particularly when it comes to downtown Los Angeles, but then, of course, also spreading to other major cities as well, protesting the immigration raids that have been expanded under President Trump's second presidency. California at the moment is urging a federal appeals court to maintain that lower court's order to limit the Trump administration's use of National Guard troops in LA to respond to those raids. Shery, this also comes, of course, as we saw some extraordinary scenes across American cities over the weekend in the No Kings rallies.
It's been a busy weekend. We, of course, were also following the escalating tensions between Israel and Iran that's really rattled markets. You can see right there that oil prices continue to gain ground, but still we're at session lows now after gains that put the WTI price at past $77 a barrel at one point early in the Asian session. The China show is next. This is Bloomberg.